Welcome back to Investing Talk podcast. We're doing something a little different today, digging into a stack of sources one of our listeners sent over. We've got recent news releases, financial reports, market analysis, all focused on a company you've probably heard of, BlackBerry.
That's right. We have info covering their status as of late May 2025, their full fiscal year 2025 results, a share buyback announcement that just happened, and even a summary from a due diligence report.
So our mission here is to unpack these sources, pull out the really important bits, and help you get a clear, well-informed picture of where BlackBerry is right now, all based strictly on this source material. We'll look at recent performance, their strategic moves, and, what the future might hold according to this data.
Let's get into it.
Okay, let's start with what seems like a pretty significant announcement from May 8th, 2025. BlackBerry got the okay for a normal course issuer bid, an NCIB.
Right. And this program essentially lets them repurchase their own common shares. Quite a few, actually.
Yeah.
Up to 27,855,153 shares.
Wow, okay. What does that represent in terms of scale?
According to the filings, that's roughly 4.7% of their public float as of May 5th, 2025.
4.7%. That sounds like a meaningful chunk. The sources say they can buy these shares on exchanges like the TSX, the NYSE, and maybe even through private deals, and any shares they buy back get canceled.
The program itself kicked off May 12th, 2025. It can run until May 11th, 2026, or, until they hit that maximum share number, whichever comes first.
So stepping back, why do this? I mean, what's the signal here? What does this tell us about how the company sees itself?
Well, the source material, it indicates that management feels the market price might not fully capture the, let's say, the underlying value of the business or its future prospects. So they see buying back shares as a good use of available funds.
Like an investment in themselves, almost?
Kind of, yeah. They frame it as an attractive, risk-adjusted return on capital.
Makes sense. And the reports also mention it helps offset dilution from shares issued under their employee equity plans.
That's another stated reason. Keeps the share count from creeping up too much due to compensation.
Okay. Let's shift gears then and look at the financials. Specifically, the results for fiscal year 2025 ending February 28th. The sources seem to highlight that BlackBerry beat expectations for Q4 and the full year.
That's what the reports indicate. Total company revenue for the full fiscal year landed at $534.9 million. And just in the fourth quarter alone, revenue hit $141.7 million.
And profitability. The sources mention improvement there too, at least on an adjusted basis.
Correct. Adjusted EBITDA for the full fiscal year was $84.2 million, which apparently exceeded their guidance. Adjusted basic earnings per share was positive, 0.02 cents for the full year.
Okay, what about the standard accounting?
Right. Important distinction. The GAAP net loss was still $79.0 million for the year. However, the GAAP basic loss per share did show improvement compared to the prior fiscal year.
So adjusted positive, GAAP negative, but improving GAAP loss, what should we take away from that difference?
It suggests, that the core operations, when you strip out certain items like non-cash charges, restructuring costs, maybe acquisition accounting, those core operations generated an adjusted profit. But the overall bottom line, according to standard rules, still reflects those other costs or past impacts. The adjusted number gives a view of current operational performance, while GAAP shows the total picture.
Got it. And operating cash flow.
That also improves significantly year over year. That's a positive sign for underlying cash generation, even with the GAAP loss. By the end of fiscal 25, their cash and investments totaled $410 million. The sources say that's partly due to better operating cash flow and, importantly, the proceeds from selling Silence.
Okay, let's break down the revenue sources. QNX.
QNX revenue came in at $236 million for the full year.
Yeah.
That's up 10% year over year. Solid growth there.
And Secure Communications.
$272.6 million. And then licensing brought in $26.3 million.
And it really looks like QNX and Secure Communications are the main pillars now, doesn't it?
Absolutely. That seems to be the focus.
Which leads us right into that big strategic move mentioned everywhere in these sources, the Silence divestiture.
Yes, that sale was completed early in Q4 fiscal 25, so in the quarter ending February. BlackBerry netted $80 million in cash, plus shares valued around $100 million from that deal.
And the clear message from the reports is this streamline things, right? Allow them to really focus on QNX and Secure Communications.
That's the narrative. QNX is their embedded software platform. Hugely successful in automotive systems. The sources mention it's in over 255 million vehicles now, but they're also pushing it into medical devices, rail, aerospace defense, other areas.
And Secure Communications, what does that encompass now?
That covers things like their secure mobile calling product, Secure Suite, endpoint management, or UEM, secure productivity apps like Work, secure messaging with PBME, and also critical event management through ad hoc, enterprise and government stuff, mostly.
So the silence endpoint security assets, the ones they sold, where did they go?
They became part of Arctic Wolf as of February 3rd, 2025. So BlackBerry's own cybersecurity efforts are now described in the sources as focusing on secure communications and IoT security, not broad endpoint protection anymore.
They've also been busy with partnerships, it seems.
Yes, several are mentioned. Making QNX SDP 8.0 available in Microsoft Azure's cloud, collaborating with AMD, Vector, TT Tech Auto for vehicle software platforms, working with Intel on robotic systems. Seems like they're trying to expand the ecosystem.
Okay, what about looking ahead? Fiscal year 2026. Do the sources give us an outlook?
They do provide guidance. Total company revenue for FY 2026 is projected between $504 million and $534 million.
How does that break down by segment?
Guidance is $250 to $270 million for QNX, $230 to $240 million for secure communications, and about $24 million for licensing.
And earning.
The forecast for non-GAAP basic EPS for FY 2026 is in the range of FY08 to 0010 cents.
Okay, and cash flow? Still positive.
Expected to be, yes. Operating cash flow guidance is around $35 million for FY 2026. So continuing that positive trend.
Now, here's something that really caught my eye in the source material. The QNX royalty backlog.
Ah, yes, that's a key metric they highlight. It reached about $865 million at the end of FY 25.
Up from the previous year.
Up from $815 million the year before. And what's significant about this is it represents future revenue they expect to recognize, primarily from the automotive and industrial sectors, as products using QNX get manufactured and sold. It gives some visibility.
That jump in the backlog, $815 million to $865 million. That sounds pretty positive, doesn't it? Does it guarantee smooth sailing, though?
It's definitely encouraging, shows continued design wins and embedding of their tech, but converting that backlog into actual recognized revenue still relies on production volumes. You know, how many cars actually get built, how many industrial systems ship. So there's still execution dependency, but it does provide a solid base for future QNX revenue.
The sources also mentioned cost-cutting. Looks like they exceeded their targets there.
They did. Reports say they removed over $150 million in annual run rate expenses. So these cost reductions, plus that growing QNX backlog, these are definitely framed as opportunities in the documents.
But what about challenges? Are there execution risks mentioned?
Oh, yes. A key factor noted is their ability to successfully deploy QNX and secure communications into those new verticals beyond auto, expanding into medical, defense, industrial, IoT. That's presented as crucial for sustainable long-term growth.
Okay, let's pivot to the market's reaction. How has the stock price been doing around the time of these reports?
The sources note that as of May 20th, the stock closed at $3.91. And while it might have dipped slightly that day, the interesting part is it surged over 24% in the month leading up to that date, which means it significantly outperformed its sector and the S&P 500 during that specific period.
Interesting. And analyst sentiment, has that shifted at all?
It seems, based on the commentary referenced, that sentiment has become somewhat more positive following the restructuring and the cost cuts. The potential for profitability, especially on that adjusted basis, is viewed more favorably, though revenue projections still seem cautious.
So when you synthesize all the strengths and risks highlighted across these different sources, what really stands out?
Well, on the strength side, it's definitely the more focused portfolio now, just QNX and secure communications. The strategic moves, like selling Cylance, are seen as improving financial health and focus. And the innovation, like the QNX relaunch, gets positive mentions.
And the red flags, or the key challenges.
Stock price volatility is one point mentioned. Not unexpected for a company in transition, perhaps. A bigger one is the heavy reliance on automotive and industrial sectors. That means exposure to economic cycles in those areas.
And the overall revenue trend.
That's a persistent challenge highlighted. Despite growth in core segments like QNX, the total company revenue has been declining over recent years. They need to turn that trend around.
Competition must be fierce, too.
Absolutely. The reports mention names like Microsoft, VMware, Wind River, Green Hills Software. They're all players in related spaces. BlackBerry's edge, it seems, lies in its deep roots and specialization within that embedded systems niche, particularly QNX's track record.
Did the due diligence summary offer any insights on financial ratios, like debt?
It noted specific ratios like PE or debt to equity weren't easily pulled from the search results it analyzed. But reading across the other documents, the context suggests leverage is seen as more manageable now, especially after the silent sale boosted cash. Profitability, as we discussed, improving but still gap negative for FY25.
Okay. We've covered a lot of ground here, really digging into BlackBerry's recent updates based purely on these sources.
We have. We've seen a company that's gone through major restructuring. It's improved its financial footing, at least on an adjusted basis, and improved cash flow trends. And it has a much sharper focus now, QNX and secure communications.
The share buyback does signal some internal confidence, you could argue, and that QNX backlog number offers a degree of future visibility, which is helpful.
Definitely points to consider. But the challenges are also clear from the sources. Reversing the overall revenue decline is key. Sector dependence is a risk, and competition isn't going away.
So, wrapping it all up. Based only on this source material we've looked at today, BlackBerry appears to be a company very much in transition. There are signs of operational improvement, strategic clarity, but also significant work still needed to show sustained top-line growth for the whole business and achieve consistent gap profitability. So as you think about this snapshot of BlackBerry, here's a question to ponder, drawing from what we've discussed from these sources. How effectively can BlackBerry leverage its strong foundation in embedded systems, especially QNX, to drive enough growth in these newer vertical markets, medical, industrial, etc., to offset any legacy declines and finally achieve consistent profitability according to standard accounting rules, all while facing down some very tough competitors? Something to think about. Thank you for joining us for this deep dive today. If you found this helpful, please do take a moment to subscribe, like this discussion, and maybe leave a comment with your thoughts. We really appreciate your support.